The deep dive this week looks at a few reports of interest. As I've said, the first one, industry relevant, is the Savills UK Cross-Sector Outlook for 2026. So as I say, I've summarised this with relevant commentary so you can see more easily what the report says and also what my own personal thoughts are. So hopefully this format is useful, but I'd love to get some feedback if you are listening to this. So, Savills Spotlight, UK Cross-Sector Outlook 2026 and the Proponomics perspective. So cutting through the noise to see what the team at Savills are actually saying, they're calling for realistic optimism for 2026. So it's a little bit better than cautious optimism that's been talked about for 2025. They now want realistic optimism. After a turbulent 2025 where we saw more kite flying from the government than actual policy delivery, they reckon we're turning a corner. What do I think? I'm always wary when I hear realistic optimism. We need to look at the data at the end of the day. Well, they're right that the geopolitical stress has been a major driver. The real story for us investors is the spread between property yields and the risk-free rate of return, the gilt yield. If there isn't return, what's the point of bothering to put in the effort and the extra risk of bothering with property if you could get that return by sitting on your backside? And I'm not talking necessarily about myself and you. My risk-free, my premium above the risk-free rate of return is very large because we put a large amount of effort into the operation. I'm talking for institutions and big capital that we probably need to come into UK property, rental property, frankly, in order to save the market after the government has damaged it so very much over the past 10.5 years.